All right. So this is where we last left off yesterday, okay? We have one more transaction left to do, which is to record this owner's withdrawal, okay? We just finished up our general journal, page 4. And again, since there's only one line here, there's no need to draw any lines or anything like that because you could tell if someone tried to squeeze in a transaction here. So other than that, we can move on to page 5 of this general journal, okay? And let's continue on. So after we record this last transaction, we're going to go ahead and prepare our trial balance to ensure that when we were doing our accounting, we didn't make any mistakes along the way. All right, so here you go. The owner on the 14th, right? Since we already recorded the coffees, right? Last thing that we have here is the owner end up withdrawing $1,500 from the bank. Okay, he's the owner. He's been working so hard for the past 2 weeks. Okay, setting up the business. So he's been nonstop, ordering all these things and hiring all these people just to get the store set up and getting it ready to open on Monday, the 17th of June. So in this case, right, he thinks that he deserves to pay himself $1,500. Now in this case, right, the owner and the business is one. Okay, they act as one entity. Okay, so in this case, right, he doesn't need to actually put himself on the payroll. He can take money whenever he feels like it. And in this case, he's going to do an owner's withdrawal. Now, okay, he's going to withdraw from the company. So how am I going to record this transaction?
You just put draw.
Owner's withdrawal. Good. And what was the, okay. We're going to use the account owner's withdrawal. What was that?
Owner's withdrawal.
Mm-hmm. Because he's taking money out from the company. And how is he going to pay himself? Checking, right? How so? Is he going to go to the bank himself and just withdraw the money, or should he cut himself a check and deposit it in his own bank, his own personal bank account?
I guess you could do that.
Okay, but which one do you think should be?
Probably the checking because it keeps a record of doing it.
Exactly, right? Second thing too is that if he decides to just go into his own bank, to his own company bank, and just withdraw money, right? Without giving a statement of a reason why, right? That could be considered that he's trying to swindle his own company, right? Taking money out of his company for no apparent reason. But again, because he is the owner, right? He owns the company. That's correct, right? In terms of the money that is in the bank account is his money too. But in a proper, business, kind of environment, right? The best way to keep track of it and actually justify the reasons why he's taking this money out is by cutting a check out, right? Because then you can see the track record of where that money went, right? Obviously, he's going to cut himself a check. He's going to put it and deposit it into his own personal checking account. So therefore, it's kind of more, in a sense, more proper, right, to take money from a business and properly put it into the personal checking account instead of just withdrawing the money for no reason and just putting into your personal bank account, right? That can be considered fraud. But in this case, if you're cutting a check, you can justify the reasonings for it. So, right? So in this case, that's exactly what we're going to do. We're going to cut him a check, right? So let's check first the chart of accounts, right? What account is an owner's withdrawal? The account number is 32,000, right? It's part of equity because he's purposely decreasing money from his equity because he's taking money out from his equity, right? He's taking his original investment and pulling the money out. So in this case, he is intentionally decreasing his equity by doing an owner's withdrawal, which is account number 32,000. And he's going to be writing this out for $1,500. Okay? And let's go ahead and cut him a check. Okay? Check register. All right. He wrote the check on the 14th, right? For $1,500. And do you guys remember what the owner's name is? Okay. The owner is Mr. Bob Mason. Okay. Bob Mason is the owner of Coffee Cafe. So there you go. He's going to cut himself a check, $1,513 for the $1,500. So there you go. We can go ahead and make a note here. Owner withdrawal, right? You don't need to specify his name because obviously he's the owner. All right, owner withdrawal. Okay. And you wrote the check 1513. Okay, from his checking account. Okay. So once again, now that I reached the end of my journal, right, last but not least, I'm going to go ahead and put this bar here to represent that I am done with the transactions for this week, right? What I'm going to do here is that I am planning to do a trial balance every 7 days just to ensure the accuracy of my accounting, making sure that throughout this entire time I was journalizing, that I properly journalize the correct debits in the correct credits, okay? So in this case, that's exactly what we're doing here. And we would know because when we do our trial balance, if there for some reason is a discrepancy, right, we will know because, the debits won't equal up the credits. So therefore, once we do have that kind of error, we need to figure out where that error is in our journaling. Now, because I'm doing the trial balance, right, as of week 2, if you remember what I've said earlier, right? The reason why we're doing a weekly trial balance is to ensure that we are doing the accounting correctly, but as we make our mistakes, right? We're not waiting till the very end to find our mistake, right? We're trying to find our mistake as soon as possible. So within the week of transactions. So that means if I do end up having a discrepancy in my debits and credits, right? At least I know it's within the transactions that happen as of week 2. So starting on June 8th all the way to June 14th. Because my first trial balance I've completed, right, panned out evenly, right? We had even amount of debits to the even amount of credits, right? And we know that we ensure that the first 7 days of transaction is good to go. So anything that we have a problem in our trial balance, we will know it must have happened sometime in the week 2 of transactions. Okay? So that's what I'm doing. I'm going to block this off so that I know this is where I'm preparing my trial balance. Okay? So once you have this, right, let's go ahead and update our ledger with those account balances here. Okay? So we're going to be tapping into our equity account because owner's withdrawal is the first thing I have here. So today is the 14th. Okay? And you could say owner's withdrawal, and you could say, how did he withdraw? Well, he used a check number 1513. Okay? Not really much details you can say there because he's just taking money away from his company, right? Is there any real detail into this? You want to justify it? Hard work? I don't know, okay? Whatever kind of notes that you want to put there. In this case, I'm going to put my paper trail, which is the check number that the owner took money out from the company. And of course, we're on General Journal page 5 because we started a new one. And because it's a debit, right? Therefore, it's 1500. Now, this is confusing, right? Because if we know what owner's withdrawal does, right, it decreases the accounts. In this case, it decreases the equity account, which in this case, that's true, right? How do we increase equity? We increase it using a credit. So therefore, this is a contra account, owner's withdrawal, which will go against our equity. So it should be a debit in this case, all right? And that's exactly what we journalized it as. It is a debit. So it is intentionally decreasing my credit here, or my equity, which is a credit, okay? And of course, last but not least, I need to update my checking account because I end up taking money and I need to adjust my checking account accordingly. So 615, right? Or 614, excuse me, 614. It is check number 1513. All right, General Journal page 5. And we decreased our checking account by $1,500, bringing our account balance from $5,600 to $4,100. So again, not so good. We only have $4,000 in the bank to prepare to get our store up and ready before, and then we owe almost $15,000 of money to all these vendors, okay? So not so good right now, okay? So now that we have this, right, okay, right, in this case, right, so we finished the journal, we finished the ledger. So question here is, do we need to use the subsidiary ledger?
No.
No, because this is the owner. The owner is not considered a customer, not considered a vendor, and for sure is not considered an employee, right? Has nothing to do with the people that are involved in his business because he is the business. So therefore, no need to utilize the subsidiary ledger at all for this transaction. So if you want to, you could block off here if you'd like. It's not necessary. Just the journal is good enough. So save your journal because now we can start preparing for our trial balance, okay? All you will be needing is just your general ledger and your financial form or trial balance here because we are done with the transactions on week 2. So all I need is my ledger and all I need is my trial balance, okay? So with that being said, here is my trial balance and here is my ledger. Now, if you guys remember, what does the trial balance do? Straightforward. It's going to give us a list of all of the accounts, right, with their respective account balances. And what we're going to do is we're going to test if our total debits equal our total credits. So in this case, we're going to go through every single account in our chart of accounts that has an account balance, and we're going to list them out. So in this case, starting with our bank account here, nothing there, okay? No account balance there, so we need to record this or put this in our trial balance? No, right? There's nothing in there, right? So what's going to be my first account that I am going to be listing in here? My checking account, right? In this case, what is my current account balance in my checking account?
4189.92.
Yep, so right now I'm at $4,189.92. Okay, format it how you like. If you prefer accounting style, comma style, right? So you know that these are all in dollar amounts. Okay, so I have $4,189.92 in my checking account. Right? Let's keep moving on. Next one. Do we have a petty cash? We haven't established it yet, so no. Did we put money in the cash register? Not yet. Do we have accounts receivable? Once again, we haven't even opened up our store yet, so no, we don't have any customers for us to owe us on an account. Right? How about business supplies? Yes, we did buy some business supplies, right? Our very first thing that we bought was medium coffee cups. So you can shortcut, you can abbreviate all you want on your trial balance because this is just, again, to just testing your account balances if they are. You don't need to put them full words or whatever you want. If you can make any shortcut, do it on the trial balance. Do not do it in your journal because that is where it's kind of like you have a reason why you have a chart of accounts. Okay, so don't abbreviate in your chart in your journal. You can abbreviate in your ledger. I mean, you're just writing notes in there. And the trial balance you can abbreviate here too. So in this case, medium coffee cups. Okay, and of course I'm gonna put large coffee cups. So in this case, how much medium coffee cups do I actually have right now? Or in this case, what's the account balance?
$54.12.
We have $54.12 of medium cups. Okay. What about large cups? Oops. What about large cups? Right? We have $81.19 of large cups. Okay. We haven't bought sugar or creamer yet. Okay. We haven't even bought office supplies yet. Okay. What about inventory? Yes, we did buy some inventory. And what were they? Regular coffee and supreme coffee. Okay. How much regular coffee do I have right now? We have $200 worth of regular coffee. What about supreme coffee?
$2.25.
We have $225 worth of supreme coffee. Right? No ceramic coffee mugs yet, right? Because we have periodic inventory, so we won't convert that till towards the end. And then, do we have any furniture? We do, but the account balance is 0, so no point to having to put that in there. It's not going to make a difference. But my very first furniture I have is my bistro table and chairs. So in this case, I don't have to type. I could just do tables and chairs. Okay. How much is my tables and chairs right now.
$66.05
$6605.08. Good. Okay. What about my counter?
$11.93.22.
Right? 1193.22. What about my desk? $658.37. Right? And what about my display shelves? Right? It's at 57708. What you're going to be noticing is like, hey, wait, I have already written this in my trial balance before. Yes, you have. But don't forget, that was the previous trial balance, right? We've incurred even more expenses, right? And we purchased more assets. So in this case, right, we're rebuilding our trial balance, including things that have existed already in the previous trial balance. In the next trial balance, I will show you a quick and easy way to be able to transfer all the information, like copy and pasting, without having to retype everything in, right? And we're gonna insert our extra, items in there as we get through each item or each account in the next trial balance. But right now, I'm going to continue keep typing in what I have, what I see on my trial balance, and then the next trial balance will do, I'll show you an easy shortcut that you can do so you don't have to type in all these numbers once again. Okay? So in this case, we got the shelves for 57708. Okay. Let's see, what else? Did we buy any office equipment? Yes, we did, right? We bought a computer. We bought a printer. And we bought a cash register. Okay. My computer was the 183484, which we know from our previous one, right? No changes to my computer. No changes to my printer either, right? It's still $378.87. Okay. And of course, my cash register is still at $649.49. Okay. Did we buy any equipment? Yes, we did. We now have coffee brewers and a coffee grinder. But in this case, right, let's recognize the first one, which is the coffee brewer. Coffee brewers. Okay. You could do brewer, you could put coffee grinder, whatever you want. Brewer or grinder. Brewer. Okay. Now, in this case, I acquired 2 coffee brewers. So this is definitely different than the one that I had previously, right? Because I just transferred this amount into my account as of June 10. So in this case, right, I have a grand total of coffee brewers to be $4,527.95. Okay. Now, do I actually have my coffee grinder right now? My account says I have nothing in there. I did purchase it, did I not? But where is it currently?
You have to send it to you.
Well, no, they already did send it to us.
It's in miscellaneous.
It's currently in miscellaneous suspense because there still needs work to be done with it. So right now, we do have our coffee grinder, but right now it still needs work to be done on it. So we're not going to recognize it as a coffee grinder yet. We're going to recognize it as just a miscellaneous suspense as of for now. Okay? So we can skip over that account. All right, vehicles. Yes. We end up buying a truck, right? How much was the truck worth?
$32,208.98.
Yes, $32,208.90 is what the truck was worth. Okay. Now we're moving into prepaid accounts. What's my account balance in my prepaid accounts account?
$6,654.17.
Good. All right. We have some deposits, right? For $1,700. Okay. We have goodwill, right? At at $2,100. Okay. Last but not least, right? Miscellaneous suspense. I have an account balance in my miscellaneous suspense account. All right? How much is it worth right now? $3,088.07. Okay? Right? And that is all of our assets. So now we can move on to our next category or next type, which is our liabilities. So, first thing on the list we have here is accounts payable. Right? Make sure you're on the credit side. What is the current balance in my credit side of my accounts payable account? I owe a whopping $15,676.40. Okay? I even opened a business credit card, and I owe money on that too. Okay? I owe $320.31 on my credit card. Okay? And I even owe restaurant supplies on a notes payable for $649.49. Okay? And let's see what else. I didn't have any payroll yet because I haven't paid my employees yet, but I did acquire some employees. Okay. Let's see. Utilities payable, right? We haven't received a bill from our utilities yet, so nothing there. Unearned revenue, we haven't sold anything yet, so nothing there. Sales tax, we haven't sold anything either yet, so no sales tax there. Interest payable, well, we haven't gotten our first round of bills from our credit card company or my loan. Okay? And loans, I don't have a business loan, but I do owe the bank for a truck loan, right? And I owe the the bank for the truck loan to be a total of $29,221.90. So I owe a lot of money to a lot of people, okay? A lot of different people, okay? The accounts payable is a bunch of different vendors, right? I owe the credit card company, right? I owe one business on an account, okay? And I even owe the bank $32,000. So I'm sorry, $29,000. So in this case, not looking too good here. We're owing a lot of money, okay? So let's go ahead and move on to the next account type. Here we have our equity, okay? So here, of course, we have our original investment, okay, at $30,000, okay? That was my original investment. However, the last transaction we incurred was a owner's withdrawal, which debited my account for $1,500. Okay. We haven't closed out our accounts yet, so no income summary. So we are done with equity. Revenues, we haven't opened up our store yet, so we haven't sold anything yet. Skip that. Cost of goods sold, well, because we haven't sold our inventory yet, therefore we can't tap into our cost of goods sold because we haven't sold anything yet. No sales, therefore no cost of goods sold, therefore no need to touch inventory. So no cost of goods section here. However, the last section that we do need to make note of is all of our expenses we have incurred in the last 14 days. So in this case, right, first expense I see on the list here is advertising expense. Yes, we bought some flyers, we bought some newspaper ads for a grand total of $185 debit. Okay. We haven't incurred any bank fees yet. Okay. We haven't received our bank statement, right? But we are looking at a bank account, right? It is very low from where we started. Okay. So we need to keep an eye on that so we can prevent our account from getting any fees and charges and so on and so forth. Okay, so no bank fees yet, but eventually we'll look at our statement and figure out if we got charged or not. Okay. Business expenses, yes, right? We did incur a business expense for the interior design, right, for $1,000, right? We did pay Kim to consult our designing, right? We did incur some insurance expense, right? We need to, or in this case, sorry, freight expense, right? Because we did buy periodic inventory. We had to pay our shipping separately. So freight expense, right, for $100, okay? Right? We did pay for insurance because we need to protect our store in case of something happening, right? Which we already acknowledged for 1 month's worth of insurance cost me $195.83 per month. Okay. We haven't calculated our interest expense yet, right? We haven't received any of our bills from our loans or anything that has interest that generates on there. So in this case, no interest expense that we have to pay. Okay. Labor expense. Yes, we had somebody come in, work on designing the store, and that was the subcontractor expense. Right? For the 1890. Okay. Temporary labor expense. Yes, we will incur that soon, but not yet because they're not scheduled to work until the 17 all the way to the 19, and they won't get paid until the 21st. So in this case, have we incurred it yet? No, it's pending sometime in the future. Okay, but yes, we will have a temporary labor expense. Okay. License and permit expense. Of course, we had to spend money to buy a license to do business. License and permit expense. Okay, for $375. Right. We also took a loss on disposing the furniture. Okay. For $2,000. We lost $2,000 there. Okay. We haven't bought office supplies yet, so there's no need to have an adjustment yet. We don't even have them in the first place. And we have employees, but we haven't paid them yet. So no payroll liabilities or expenses or taxes that we've incurred expenses. Okay. However, yes, we did make a purchase of periodic inventory. So yes, we do have a purchase expense for the $196. Okay. We haven't encountered any returns or allowances yet or any purchase discounts because we haven't paid for my purchases yet. And we did incur some rent expense. Okay. For the month of June for $1,500. Okay. Other than that, let's see. Did we have any travel expenses? Not yet. We bought the truck, but no one's driven it yet. All right. Utilities. We haven't paid for any utilities, so nothing there. Bad debt, depreciation, amortization, none yet. Okay. So let's go ahead and tally up our totals so we know how many total debits we have versus how many total credits we have. Now, what I like to do again is to create my formula so I can kind of see it right away. Right, I like to take my debit, right, and subtract my credit. So then, when I do put in my formula to calculate it for me, I can automatically see right away what my amount is here. Like, what's the difference between them? Okay. So again, what I'm going to do is my equal sum formula. With Excel, what you can do is you can click, drag, and highlight all the cells that you want to see, and at the very bottom of your window will tell you exactly how much that is. But I'm going to go ahead and do my equal sum, okay, to figure out my total debits and my total credits. Right? So, all right. Has anyone already solved for it already?
I got 75,868.10 cents.
And did you match on both sides? Perfect. $7,868.10 on the left. $75,868.10 on the right, which gives me a 0 discrepancy. So therefore, that means we did our accounting correct. No mistakes were done, right? I transferred all of my credits in the appropriate account, and each one gave me a correct balance. So in this case, $75,868.10 for the debit and credit is correct. Okay. All right. If you guys have a discrepancy, right, use my idea where I do check what my difference is between my total debits minus my credits, and you'll get an account balance right here. So for example, if I didn't record, let's say I didn't record my owner's withdrawal, right, it will tell me right here in my formula that I am missing $15,000. And if you look from here, you got 74,000 versus 75,000. So this one, it's clear that you're missing $1,500 in your debit side. If it's something else like 6250, then you're going to have to kind of go back into your journals and again to find where those amounts are. If you have multiple errors where you have a big lump sum number, unfortunately, you're going to have to go back through your transactions and make sure, did you record it properly? Did you transfer the information properly? Okay, but in this case, I'm missing my 1,500 and I have it correct right here. Okay. All right. Any questions in regards to this? Now, we just went through this. Okay, and I will post the answers to this in the Google Classroom at the end of class. So if you're struggling and you don't get this number, don't stress too much about it, trying to figure out where that number is yet. You have time afterwards when I post the answers to kind of figure out where you forgot a transaction and so on and so forth. Okay. So, any questions here?